All right. Hello, members. Thank you so much for joining in today. I am Kavita Agrawal, the founder of EXP-Invest, and today we are here to talk about market trends. Why do markets trend, and what are the factors which affects or helps the market start with a new trend? In this session, I'm going to take you through some of the factors and I'm going to tell you how to identify them and why exactly they affect the trend. All of this discussion is going to be centered around Nifty 50. Right after this discussion, I will also look at your comments and try to help you out, screen through your stock queries and provide my analysis to you for better decision making in the market. That being said, I would also like to emphasize that just taking taking advice or stock recommendation at one point of time is not enough. It is very important to manage active positions, especially if you're a short-term or a swing trader like me. So for that, you can also join my Telegram channel. The link of that will be shared in the chat shortly with you. Now with this, let's begin with why markets trend. All right, so as you can see, there are lots of factors in the market which affect the trends in market. And understanding all these various factors which drive the Nifty 50 and the broad Indian stock market can be key to your own success in stocks. Now, for those who might be very new, Nifty 50 is nothing but the index which tracks the performance of the top 50 stocks in Indian market. There are lots of factors which affect the Indian market especially. These can be investor sentiments, there can be political factors, these can be economic indicators like, for example, interest rates, the CPI data, inflation data, and production data. Basically, sorry, just a second, let me just put that on mute. There you go. Basically, inflation data, production data, manufacturing data, employment data, unemployment data, tax filing data, a lot of things. There are numerous factors which affect trends in the market, and most important factor which primarily affects the market trends is investor sentiment. We will talk about it in a little bit more details shortly. Of course, companies' individual earning reports and various other filings by the companies also affect trends in specific companies, specific stocks. Now, the momentum which is created by these various factors interacting with each other is what propels the whole market upwards or downward, depending on which positive or negative side all these factors cumulatively fall. Let's talk a little bit about investor psychology. There is a very famous technical analyst called John Murphy who basically put it really well. He said the market is the pendulum that swings forever between unsustainable optimism and pessimism. Basically, investor sentiments can shift very rapidly from extremely positive to extremely negative, driving the market in one direction or the other. The most recent and most popular example of this kind of sentimental shift was seen during COVID. When COVID hit at the end of 2019 or in the beginning of 2020, the market tanked very sharply because that time it felt like the world was coming to an end. And soon after, as soon as those sentiments fizzled out, the extreme pessimism fizzled out, what happened was an extremely fast rally which has given rise to a lot of retail participants' interest. So understanding investor psychology in this kind of market is extremely important, even more important than it has ever been, because recently more and more examples of how investor psychology can affect the stock market and propel new momentum or new trends in the market have become common. Another factor is politics. Now, what government policies are being introduced? How do they impact the overall economy is something that the stock market gauges really well. Elections and political stability is something which affects investor confidence, and that is common knowledge. As soon as India, back in 2014, when India had showcased that it was politically in safer hands, or rather in more stable hands, the stock market started off a fresh new rally, which has been going on till date. International relations and global events also affect the stock market. When a country positions itself in a stronger hold with respect to international relationships, it receives appreciation for that through increased foreign institutional investments. This is what we've seen in the Indian market as well. Another favorable impact is when the government starts giving tax subsidies to businesses, or starts giving tax cuts, brings about regulatory reforms, or start giving out more and more incentive schemes for increasing manufacturing or quality of services or quality of goods. That is another very positive element which affects or propels new momentum trades in the market. So this is the reason why it is very important for a stock market participant, whether you are an active trader or a passive trader, to keep an eye out for major changes in Indian political scenarios, as well as the policies which are being brought about by government. Global events also affect the Indian stock market as well as any other markets. Now, if you remember the Ukraine-Russia war that happened, that had a massive negative impact, not just on the global market but on the Indian market too. And if you remember, when the correction in the Indian market had started off after the Russia-Ukraine war, the correction in the Indian market took some time to start off, whereas it had kicked off much earlier in the US economy. So when there is a massive negative event unfolding, even outside the borders, we have to be careful and we have to manage our active positions in accordance with global events unfolding. Another big example is, of course, the pandemic, which initially was, if you remember, when the pandemic started, when the news of the pandemic started doing rounds, the Indian market was pretty close to its high, whereas as soon as the pandemic news started catching up, the decline which was seen was quite rapid. So impact of global events is also very evident. So what are the strategies with which you can invest in the Indian stock market, or how can you catch these trends at the beginning? So first of all, you need to understand what are the trends in the Indian stock market. So if we talk about right now, we are experiencing a upward trend. What are the major factors which are at the foreground? One is the interest rate debate, whether interest rates are going to keep rising, whether they'll be tapered off, whether they are going to be reduced soon. Now that is impacted by inflation. So you need to keep an eye actively on the inflation data. The other thing is, so especially if you're a retail participant, it is very important to keep some diversification between sectors and industries. Strategies change for people basis their profession. If you're someone who is treating the stock market as a side business, for you it is very important to maintain diversification. Whereas somebody who works very actively and is very focused on the stock market, is on top of all news, concentration becomes their handy tool. Because obviously it's a lot easier to make quick money when you have all information or all cards on the table and you're aware of what's going on. You can take more confident bets. But for somebody who is not in the stock market on a full-time basis, making concentrated bets may not be the safest way to proceed. So it's good to have diversification between sectors and industries. For your long-term horizon stocks, try to avoid making impulsive decisions based on short-term movements. A lot of people make this mistake that when they start off with a very clear objective of what they're buying for long term, what they're buying for short term. But as time goes on, because of lack of notes and poor short-sighted memory, their action starts to go against their own objectives. So it always helps to have a trade journal. I have covered the topic of trade journaling or trade tracking extensively in my previous sessions. You can go over to my YouTube channel, just look up for EXP-Invest.in, and you can take a look at the old videos. There you will find a lot of material about trade journaling and how to get into the habit. So when you do that for both your long-term and short-term positions, you find yourself staying true to your investment philosophies better. Now, if you are somebody who's interested in the short term, then of course identifying, so market timing becomes very important for you. And for those who are not very adept in analyzing the market, you might be very tempted to do a course to learn how to identify market trends. But let me tell you something, practically it is not possible. Because first of all, analyzing stocks, analyzing the market itself is a very time consuming task. Secondly, in order to place trades or manage your active positions takes a lot of time too. So if you're somebody who's already engaged in a full-time profession or a full-time business, it is very difficult to analyze and execute. So I always recommend people who want to actively trade in the market, especially in the cash segment, people who want to do F&O. Sorry, I don't have any advice for you. But if you are someone who's interested in doing cash segment trading, then I would strongly recommend that you associate yourself with a research analyst. Now, on that note, I'm also sharing with you the link to my own Telegram channel. I'm sharing the link to my own Telegram channel with you in the chat, and if you would like to get associated with me or know more about swing tradings, feel free to get in touch with me. So basically, when you want to trade the market for short term, the best strategy is to follow technical analysis or to follow the swings in the market. These swings, the beginning of these swings and the end of these swings can be identified using indicators and drawings, which which are taught in the whole, which is a whole field of study in itself. All right. So to conclude, basically, trends are driven by various factors like economic indicators, corporate earnings, global events, and investor sentiments. There are tools out there to identify the beginning and the end of these momentum trades. At the same time, the momentum trades that I'm talking about can be identified across various different time frames, from 15 minutes to 75 minutes to 1 day to weekly to monthly, depending on what kind of trend you want to trade. Right. In addition to that, if you also keep an eye out for quantitative and qualitative factors, they can also be a leading indicator of where the money is going to flow. There is also the concept of sectoral rotations, wherein a set of sectors have a tendency to trend in the market or propel into fresh momentum, fizzle out, cool down, start falling, and then another set of sectors come into play. This is the reason why every Friday in my Market Outlook series, you must have seen that I give some time to intersector analysis so that we know what is the kind of churn that is taking place. Since the last many weeks, we can see the public sector banks have been in churn. There was a period of 3 to 5 weeks when the public sector banks started to fall a lot. Warning was given that such a correction might come, and then when it bottomed out again, a heads up was also given that a probable bottom out is happening, and now we can see that the public sector bank is on the move again. So overall, the market trends are very complex and they are multifaceted. There can be a lot of things happening at the same time. Members come to me and ask me, why is the market rallying today? Why is the market falling today? At the moment, on the face of it, it's very hard to pinpoint exactly why. Maybe in hindsight, it might be more possible. But a lot of times you just have to, when you're in the market, you have to stay with the trend. Questioning the trend has not brought any, benefit to anybody ever. Whereas if you keep an eye out on the balance of investor sentiments or the economic macroeconomic trends, company reports and earnings, various indicators like momentum indicator, breadth indicators, or volume indicators, these can be good ways of identifying a probable shift in the trend before it actually happens. So staying informed and remaining disciplined are the two key approaches to sound investing and trading in the stock market. So that was all I had to discuss with you under the topic of trends in the market. Now I will move forward, take a look at the comments, and if you have any questions, I'll try my best to help you out. We have Manohar ji with us. He says he's bought Infosys and Ambuja Cement. So should he add his target? He wishes to hold it for 6 months. So give me a second. I will just share my chart screen with you. So let me move to Infosys. So Infosys, I really believe, Manoharji, that Infosys is coming out of a massive bottom. And you can see this white pin. This is where I have recommended purchasing Infosys to my members. And this momentum looks pretty strong to me, though I do believe there will be a small pullback. So as a swing trader, what I would suggest is to maintain a stop loss somewhere around the level of 1261. Now, if you're somebody who wants to make a fresh position in Infosys, I will definitely suggest to go forward with it. But since your horizon is a little bit longer, I would suggest you maintain a stop loss at the level of 1215 and do a staggered or a installment kind of allocation to the stock. My first target in Infosys is around 1365, and I believe that should be achievable in the next 2 months. Actually, that might be achievable in the next couple weeks from the momentum that Infosys is catching on. But my overall target is at the level of 1730, and I believe this target should be achieved in the next 1 year. So that would be my advice to you, that go ahead and create positions in Infosys. You also asked about Ambuja Cement. All right, so with respect to Ambuja Cement also, if you can see, there is a strong support coming in from this very blue line, which is the 200-day moving average on the weekly time frame. In addition to that, what we can see is that the volume has been tapering off on the downsides, right? If we look at the daily time frame, we can see that the volume is picking up on the plus days, which is a good sign. So I believe you can also do accumulation in Ambuja Cement. I believe it will reverse to retest the level of 530. That being said, you should maintain a stop loss somewhere around the level of 370 in Ambuja Cement. So Mr. Manohar, I hope you found this analysis useful. If you did, please don't forget to leave a comment and give a thumbs up to this stream. We have Mr. Manoj, and he's asking about Yes Bank. He has 3,000 quantity purchased at 31. So that's a pretty high price for, that's a pretty high price to have bought Yes Bank. And I can see that you forgot maybe to use your stop loss. So in the short term, I think Yes Bank is heading towards a fresh rally. And what I think is it can go and retest the level of 19. Now, going above the level of 19.5 might be very tricky for the stock, considering there's a strong trend line resistance, and this trend line has showcased its importance on multiple occasions. For example, here, it took support here, it took strong resistance here. So it's a strong trend line. So I would look for good reason to believe that Yes Bank is going to go above the level of 19, but I do believe it will retest the level of 19. So if you have, in Yes Bank, I won't suggest you to allocate more than 5% of your total trading corpus. And if what you're holding right now is less than that 5%, go ahead and buy more to average it out. But I won't suggest that you add more if Yes Bank is already more than 5% of your total portfolio, because that would be like, watering weeds in a garden where you want to grow fruits and vegetables or flowers. So not a very good strategy, right? If you're already over allocated, just wait for some time till it comes to 19 and rip off the band-aid, book your losses. So on the other hand, Manojji, you could also join my Telegram channel and stay in touch. That will help you stay in touch with me and get advice on Yes Bank whenever it comes back up. So now we have Anshu. He's asking about Amaraja batteries. Let's take a look at Amaraja batteries. It's been a while since I checked out this stock. And this is the reason why, because the stock is stuck in a sideways consolidation, and personally, in order to make a long position here, I am waiting for the stock to give a strong closing above the level of 620. On the downside, the stock has support at the level of 564. Let me just adjust my channel a little bit. There you go. So on the upside, if the stock gives you a breakout above the level of 620, go ahead and make a position for 830. But until and unless the stock gives a breakout beyond either of the lines, it's very difficult to say which direction it will take. However, if we take a look at the, well, I want to say that the weekly chart looks positive, but it does not, because if you look at the volume profile, it's not very impressive. So it looks like even on the bigger time frames like weekly and monthly, the stock is, waiting out for a strong breakout. So for now, I would not suggest you to make a position immediately. If you are holding a active position, then I will recommend you to use a 6 to 7% stop loss. Mr. Srinivas Rao is asking for the bank nifty position for tomorrow. I'm not sure if I'm very skilled to give you advice on such short time frame. Personally, time frame that short makes me very uncomfortable. But yeah, considering how strong the momentum in the market has been since the past many days, honestly, I don't know what it's going to do tomorrow, but I do believe that 42,900 is the support. So if it starts to go down, look out for the support at 42,900. And on the upside, I can see there is strong resistance at the level of 44,800. So there's a reminder from the ET market moderator, as you can see in comments. If you want to book a one-on-one paid consultation with me, you can go ahead and click the link which is present in the comments, and I'd be more than happy to connect with you one-on-one and help you out with whichever position you're stuck with. Just to let you know, my expertise lies in swing trading in the delivery segment or the cash segment. So if you come to me with options in options of futures, I might not be very useful to you. So Vinod ji, I have already shared the link t.me/ you can just go on Telegram and look for EXP-Invest in, and you will be able to connect with me on my channel. Kanakraj ji, thank you so much for joining in your kindness. We have Raghava. He says he's bought Coforge at 3780. Should he exit or stay? Let's take a look at Coforge for Raghava. Oops. There you go. All right. So Coforge is showing very strong momentum. And let's see. Let the charts load a little bit. You bought it at 3780, which means you are in pretty good profits, already 10%. So I would suggest that don't book your profits right away. I would strongly recommend you use a trailing stop loss right here, right below the spike, because you can see there is support coming in from the trend line. There's support coming in from the 20-day moving average on the 15-minute chart. So if you maintain a stop loss near the level of 4085, you are basically giving your stock to rally towards the next target, which is 4394, another 6 to 7% gain. So maintain a target of 4400 and a stop loss near the level of 4087. So Raghava, if you found that useful, don't forget to give a thumbs up to the stream and a comment, please. So we have Mahesh Ji, and he's asking for Canada. I think this is Canada Homes, right? Canfin. Okay. All right. Let's see. All right, so again, strong momentum, and since you're just asking for view, I am assuming that you want to make a fresh entry. Now, if you know, my motto is always to enter stocks before the rally, and this stock is now clearly somewhere the rally has already happened in the past. So I would not suggest making fresh positions here, because the target for the stock is at 650, which is barely 2% away. And if I had to tell you a stop loss, I will not be able to give you a stop loss lower than 614. So that basically gives a risk reward ratio 1:1, not very attractive, not worth risking your money for. So I would suggest overlook Canfin and don't try to make a fresh position. So we have Diana Ross, and she's saying that she's new to trading. Will I tell her which moving average are mostly used for long-term investments? So, Dinah, unfortunately, there is no one straight answer because there are multiple time frames and there are multiple moving averages and there are different types of moving averages. I'll tell you what I personally use, but then this may or may not work for you depending on your personality, your analysis style, assuming that you are adept with the principles of technical analysis and moving averages. So, if you want to make long-term investments, you can look for beginning of fresh trends while using 20 and 50 moving averages. You can also use 20 and 100 moving average and look for crossovers in them. But let me remind you of one thing, that moving averages are lagging indicators. So it usually pays to use other leading indicators and oscillators, for example, RSI, Bollinger Bands, ADX, in conjunction with moving averages. And in most technical analysis material, you will see that moving average is not advised as the dominant tool for primary decision making. It is very good as a secondary confirmation tool, but not first decision making. Okay, so if you are interested in long term or swing trading, you can connect with me and I will be more than happy to help you out. Let me just share the link with you of my Telegram, so you can join this link, and over there you'll also get the link to subscribe to my services if that is something you are interested in. All right, let's move on to the next comment. So we have Vinod ji is asking for RBI Bank and he wants to swing trade. Oh, sorry. So one thing about banks is that RBL, that's why RBI sounded really wrong. There you go. So one thing about banks is that, see, banks have already given a lot of rally. As we just saw on the Bank Nifty chart as well, it's very close to resistance, and that is the reason why making fresh positions in banks might not be a very, very good idea at this point of time. However, let me just quickly draw. What's going on? There you go. Okay. I'm just gonna squeeze this out. Okay, I honestly, I don't like the chart of RBL a lot. It's just that everyone cannot be everyone is not fit for analyzing every kind of stocks, because stock price movements is nothing but a cumulative psychology of all the people trading it. So that is the reason why, just like how you cannot get along with every person out there, it's not possible to get along with every stock trading on the market. With respect to RBL Bank, see, the problem is that this formation which it has given here, this is a bearish formation, and it looks like it's going to give a bearish closing with high volumes today. So making a fresh position in RBL Bank is definitely not recommended. In fact, if you have active position in RBL Bank, I would suggest you exit it right away, because I am not feeling very confident. Or you can just wait for RBL Bank to maybe retrace up to the level of 158 and then exit your position. But if I were in place of you and had active position in RBL, I would be booking my profits. But you can re-enter if the stock gives you a breakout above the level of 166 with strong volumes. That is what I will suggest you to do in RBL Bank. But for now, I will not recommend you to make a fresh position. You can, on the other hand, also wait for the stock to retest the level of 130 to 120 for making fresh positions. All right, so we have Mr. Rajiv Mittal, and thank you for advice. In the last, what's your view at the current level? So okay, so Rajiv Mittal is Mr. Rajiv is part of my community, and he had asked for analysis of Infosys and Tech Mahindra a few days back, and I had helped him out, and looks like he's in profits today. So I'm glad to know. So Rajiv ji, so since you're trading with me, I would recommend that you use a stop loss near the level of 1255 in Infosys, and wait for the stock to achieve the target of 1360 first, and I have a second target on the stock at a higher level of 1734. So let the stock come to 1361 and we'll see how it behaves. Then we'll take a call whether to hold it or to book profits. And then moving to Tech Mahindra, again Tech Mahindra is also one of the active positions for us and it has moved really well. So in this stock also I would suggest that you use the stop loss near the level of 1026, just to give the stock some breathing space, and maintain it with a target of around 1110. All right, so with that, we have come to the end of this live session. Thank you so much for joining in. I really appreciate you giving your time to me, asking your questions. I would also really appreciate if you could share your feedback or your ideas on how you think I can improve these live sessions to add more value to you. The best way to do that is by joining my Telegram channel and leaving your comment there, or simply adding your comment to the live session itself. So I will see you again tomorrow in the Let's Get Technical series, where I bring to you technical analysis related discussions. In that I discuss stock charts, sector charts. I also discuss stock ideas, and sometimes I also discuss my own trading mistakes, so that you can also learn what I have learned by analyzing my past trades. So with that, I will conclude this session and I will see you tomorrow.